Hi friends, very good evening for our session on amendments to auditing for CA Inter and also discussion on RTPs. I'm so pleased to catch you again this weekend like the way we did last weekend. And just to set out the objective very clearly, what we are trying to do in this session is get a thorough understanding of the amendments which have happened as a part of auditing and particularly for CA Inter I'm talking about. And also we will look at different questions which appeared in RTP this time, which are of relevance, obviously, for our examination. So to get into the critical aspects of amendments, I want to just take 5 more minutes of time for our other friends to join in because I know that they would also want to learn the amendments which are happening. All right, but let me just set out the broad plan, or I would say the broad layout for our current examinations or November 2018 examinations. I am fairly confident that we will have 60 to 70 marks of our November 2018 examinations. in auditing from 3 chapters: standards on auditing, then you have company audit, and you have, of course, the accounting standard dimension to auditing. So you have questions in auditing from accounting standards. So I would simply say accounting standards, auditing standards, and company audit. These 3 alone would constitute to almost about 60 to 70 marks of your auditing paper. And that has been a fairly consistent trend too. Okay, right. Now, if you have any more friends of yours who would be interested to look at these amendments in auditing, please share the link immediately so that they also can join in. Right. Now, let's get started. So the very first amendment that we will talk about is an amendment in the audit report, which talks about, just demonetization. So during demonetization period, as you know, from 8th of November 2016 to 30th of December 2016, the demonetization impact, whatever has happened, if the company had demonetization or the old notes, then there is a disclosure which the company had to make in the financial statements, notes to accounts, regarding the currency what it held during demonetization period. Important amendment. It is in the audit report. The currency held by company during demonetization period had to be disclosed in the audit report, in the financial statements. Now, what is auditor's responsibility? Auditor should give a note in the audit report on whether the company actually gave the disclosure in the notes to accounts for the demonetization period as per the requirements. That is the critical amendment what I'm talking about. So let me summarize it. What should management do? Management should have given a note in the financial statements regarding demonetization period, cash what the company was holding, etc. So there is a disclosure. What should the auditor do? In the audit report, auditor should give a report, or auditor should give a paragraph on whether the disclosure given by company regarding the demonetization period transactions is appropriate or not. That is what the auditor should talk about in the audit report. I hope this is clear. Now, let me move to the next one. So the next amendment that I want to talk about is regarding the rotation of auditors. Let me just help you recall the points regarding rotation of auditors. If it is there are conditions. Rotation of auditors are not applicable to every company. There are conditions. So you know that unlisted public company with paid up capital greater than or equal to 10 crores. Then private company with paid up capital greater than or equal to 20 crores we had earlier. You remember? So when in the earlier requirements it was 20 crores for a private company. Now listen carefully to the amendment. That 20 crores got changed to 50 crores. Are you clear about what I said? 20 crores got changed to 50 crores. So what is this 50 crores? If the private company's paid up capital is greater than or equal to 50 crores, then rotation provisions will apply to that particular private company. Of course, after that you have all unlisted companies which have deposits, borrowings, etc. from banks, financial institutions greater than or equal to 50 crores. That borrowing point is same. So out of 3 points, concentrate carefully. The public company point on paid up capital is unchanged at greater than or equal to 10 crores number holds good. The third point on borrowings, all companies' borrowings greater than or equal to 50 crores. That point is also unchanged. Which point changed then? The second point changed. What is the second point? For private company, the paid up capital, where the earlier requirement was 20, if it is greater than or equal to 20 crores, we used to say rotation provisions were applicable. Instead of 20, now we have 50 crores. Are we clear about it? So that is the amendment which has happened. I really encourage you to write down these important points. See, when I'm doing this video, the best way for you to learn from this video is not just listening. You should also have your notes with you and make note of the important points what I'm discussing, so that I would say your preparation, whatever is expected to happen for amendments, will be done as we do these topics. Right. Then let me talk about the next point regarding ceiling limits. Quickly, if you have any other friends of yours who you think would be interested to look at the amendments in auditing, quickly add them or share the link with them so that they also get access to it. And after I do some more discussion, I will open up for more questions from your side, which we will also look at. Right. So now let's look at the next point, which is regarding the ceiling limits. So you know that we have ceiling limits on number of company audits which an auditor can do. Now, the new point which came up is these ceiling limits will not apply. I'm repeating, these ceiling limits will not apply if the company for which we are now appointed as auditor has defaulted in filing the financial statements and annual report. So what is this point about? If you want to talk about a ceiling limit, this is the maximum number of companies that you can do audit for. In that maximum number of companies that you can do audit for, if there are any companies which are defaulting companies, so if they are defaulting companies, they haven't filed the financial statements and or the annual report on time. Now, what the logic here is, for those defaulting companies, a lot of times most people wouldn't really want to do the audits of those companies. So if you want to do the audits of those companies, yes, you can. And when you're doing audits of those companies, it will not be covered for the ceiling limit purpose. Okay, right. Then let's look at the next amendment. Yeah. So this next amendment is from Rule 10A. So look at this carefully, friends. I will read out a small point for you, and then I will explain to you exactly what changed in that particular amendment. Please concentrate carefully. From financial year 1/4/2015, audit report should talk about existence, adequacy, and operational effectiveness of internal financial control systems. Okay, now please stop here. I said from 1/4/2015, the audit report should talk about existence, adequacy, and operational effectiveness of internal financial control systems. The point to note here is this date changed from 1/4/15 to 1/4/16. So this is applicable from when now? It is applicable only from 1/4/2016. That is one small change. Now, this auditor commenting on the internal control, basically what is that existence, adequacy, and operational effectiveness of internal financial control systems? This is basically auditor commenting on the strength of internal controls of the company. Okay, auditor commenting on the strength of internal controls of the company is not required in certain cases. That is the next part of amendment. So first part of amendment is the date, applicability date. Now the second part of amendment is that this internal financial control requirements are not expected to be done in certain cases. So internal financial control systems related commenting what auditor should do in audit report is not required, means it does not apply to private companies in certain cases. If it is a one-person company, if it is a small company, if it is a company with turnover of less than 50 crores as per the latest audited financial statements, or its borrowings, aggregate borrowings at any point of time are less than 25 crores, and this exemption applicable provided private company, of course. This exemption will be applicable provided that private company has not defaulted in filing financial statements and annual report to ROC. So this is one point what you need to understand. I just want to know, has everybody understood this point regarding Rule 10A amendment? Because from amendments, we do get questions, right? So till now, whatever questions we have done or topics we have done on amendments, we have done 4 points in terms of amendments. I just want to know if you understood this or if you have any questions on the amendments, what we have done till now. Please ask me right now if you have any questions. I'm just waiting for any questions. If not, then I'll proceed. All right. So then let me proceed with the other amendments which we have. Now, friends, these amendments are regarding resignation of auditor. Again, listen carefully. We have we understood resignation procedures as a part of our company audit learning. And in the resignation, we have, if it is not a government company, what is the process? If it is a government company, what is the process? That we have. So if it is not a government company, then within 30 days of resignation, ADT 3 shall be filed with company as well as ROC. That is what we have as per our Companies Act. Now, if it is a government company, ADT 3 should be filed within 30 days. With whom? It should be filed with company, ROC, and also C&AG. Okay, right. Now, the important point is this. What is the amendment in this? If this is not done, fine can be up to 50,000 or remuneration of auditor or whichever is lower. So imagine fine is 50,000. Remuneration of auditor is just 20,000. Whichever is lower. So that will be the amount of fine what you pay. And it can extend up to 5 lakhs. It can extend up to 5 lakhs. So even though we are saying 50,000, well, they can probably extend that fine up to 5 lakhs. Okay, right. Nikhil Arora, so go ahead asking your question. Rajat and TN65, I will answer your questions in a while. Okay, right. Then, yeah, so that's the point. So friends, I am just repeating the specific point regarding resignation. So fine, related fine of 50,000, which of course can extend up to 5 lakhs, and or the remuneration of auditor, whichever is lower. So you'll compare this and say, oh, whichever is lower should be the fine that the auditor might have to pay when, in case the auditor has not filed ADT 3 as per the procedure. Means if when will the fine apply? Think about it. Fine applies if auditor doesn't file ADT 3. Fine applies if auditor did not file ADT 3 with the right people. Something like if this ADT 3 should have gone to C&AG in case of government company, auditor did not send that, then fine will apply. This should have been sent to company also. Auditor has not sent that. Fine will apply in that case also. Okay. So we have the procedure. Auditor just gave on a paper about this, not in ADT 3. Will fine apply? Yes. So think about it. ADT 3 compulsory. 30 days compulsory. To whom you have to submit those? In case of regular companies and in case of government company. All these three you have to look at, and auditor who is resigning from office has to comply with these requirements. Okay, right. So Nikhil, I don't know. You said you wanted to ask some question. You didn't. Shivaji Hari, or how to write answer for vouching verification. Shivaji, this session is on amendments and RTP. So I will talk about vouching and verification questions when I come to vouching and verification related questions which are there in our RTP. Okay, right. Okay, Nikhil, I think we should take it separately because this discussion, what we are doing is focused on amendments in the auditing. Okay, I thought your doubt was regarding auditing or some amendments in auditing. So we should do that separately because this is a very focused discussion on auditing for CA Inter along with RTPs. All right. So now let's look at the next amendment which has happened. Yeah. So this is regarding the auditor. So we have a list of prohibited services as per section 144. What kind of services do we have in there? The services which may affect the independence of auditor. Something like internal controls, something like management advisory. So list of controls or list of services we have under section 144. If the person, the chartered accountant, is actually rendering those prohibited services to a company. When I say prohibited, don't think they are illegal services. Please understand. Those services under 144 are not illegal services. They are professional services which a chartered accountant can render to companies. They are highly remunerative services also a lot of times. But the only point is, those services the chartered accountant renders not as an independent professional person coming from outside. When a chartered accountant is rendering these services, it almost looks like, hey, this chartered accountant is a part of company. That is why chartered accountant is trying to build controls. This chartered accountant is a part of company. That is why it looks like this chartered accountant is building the financial model for the company when they want to submit for loans or to banks, etc. So the point here is section 144 services, what we have. You can, again, after this discussion, if you don't know section 144 services, go back to your notes and refer to section 144 services. Those section 144 services are basically services where this chartered accountant need not be independent. And if the chartered accountant is doing those services, we cannot say that the chartered accountant is independent. Are you clear about that? Okay. Now, if the chartered accountant is not independent, then how can that person do the statutory audit of the company? Think about it. For statutory audit, independence is mandatory, and this chartered accountant is not following or is doing something which is affecting the independence of auditor. Then the chartered accountant cannot be appointed as a statutory auditor. So whatever section 144 essentially talks about is, there are some services prohibited if you are already a statutory auditor, or basically you can't say, I will do services for management on behalf of management, as well as I will do services on behalf of members, because the role of statutory auditor is appointed by the members. He or she works for the members, and he or she reports to the members. So that is what is expected out of statutory auditor. But if I talk about somebody who is appointed by management to carry out internal control testing, well, then that person is appointed by management, that person is working for management, and that person will report to the management. In statutory audit, what were we expecting? We wanted somebody to check whether management is doing their work properly or not. Are you understanding the logic here? That is why the section 144 points. The reason why I'm explaining this in detail is I feel it is extremely important, and it can be tested maybe from this exam in one of the examinations to come. So the main point here is the role of stat auditor and the role of services provided under section 144 cannot coexist. That we are very clear. Now, what is the amendment? This is not the amendment. Till now, what I explained is the context. The amendment is, if you are providing such services of section 144 to any subsidiary companies or holding companies also, still you will be disqualified from being appointed as auditor of this company. So if we are providing those prohibited services to any holding company or subsidiary company, say the company for which we want to be appointed as statutory auditor is A Limited. A Limited has a holding company called H. A Limited has a subsidiary called S. If you are doing such 144 services, okay, section 144 services for this company A, now already we know that we are disqualified from being appointed as, or we can't do the statutory auditor of this company. If you want to do only the services, resign as statutory auditor and do these services. Okay. Now, you have to, if you want to be appointed as statutory auditor of A Limited, you can't do section 144 services for its holding company or its subsidiary company also. That is the important point, what we need to understand. Okay, right. Then look at one other important amendment which happened. Friends, we have something called as Accounting Standard 17, which talks about segment reporting. And in our Essay 501, I don't know whether you read Essay 501. If not, go back and read Essay 501. In Essay 501, the auditor has to check whether management gave disclosures for segment reporting as per Accounting Standard 17. That is what the auditor should do. Right, now listen carefully. The important change which has happened is, if the company is a defense company, then there are certain exemptions which the government has given for such defense companies from segment reporting. I'm repeating, defense companies have certain relaxations, I would say. Relaxations from giving segment reporting. What is the meaning of segment reporting? From this business, this is the turnover, this is the profit what I made, these are the assets. etc., etc. We have to give details. So don't break your head on that right now for CA Inter. You will get to learn those, in due course, or at least now in auditing, don't try to break your head on that. Okay, right now when it comes to the amendment, the only point what you have to bear in mind is because SA 501 talks about segment reporting. Okay, so this talks about auditor verifying segment reporting. So the important point is auditor of any company which is into defense business, okay, or which is into defense equipment, etc., manufacturing, we have to understand that they have some relaxations from central government for giving segment reporting, and such relaxations should be read to decide what kind of segment reporting such companies should give. Okay, are we clear about it? So don't apply general segment reporting principles to defense companies. That is the point what we need to learn, right? Then look at another point, Anjali Puram. So when will you take live for accounting standards? Can you just elaborate on what exactly you're talking about? Because next week we have live for accounting. So tomorrow we have, by the way, live for Group 2 accounting. So entire advanced accounting. And we already did live for accounting standards. And so Anjali, I think that answers your question. So we will talk about the other points. Okay. So reopening books. Now, interesting point. The company completed the financial year. After the financial year is over, the company said, okay, this is our profit. This is our financial position. Balance sheet P&L is prepared. Balance sheet is prepared. Company finalized its books of accounts. Now, what has happened is the company wants to reopen the books of accounts. Simply, reopening means we want to change something in the books of accounts. Reopening books of accounts is not possible beyond 8 years. Is not possible beyond 8 years. Means for 8 years you can actually reopen the books of accounts. Beyond that you can't. And these, this is an exception. If central government gives a specific order for a specific company, then you have a relaxation. You may reopen books even after 8 years of time. Reopening means what? You will change the financial statements. You will go back and maybe make some adjustments to the notes what are given, etc. So and make some changes to the financials. Basically, that's the point. So that you may do as within 8 years of time. Okay, right. Then now look at another point, friends. There is something called consolidation of financial statements. What do we mean by consolidation of financial statements? Say there is a holding company. That holding company has subsidiary 1, subsidiary 2, subsidiary 3. Holding company is like a parent company. Okay. Subsidiary companies are basically like children. Okay, let us just give an example that subsidiary companies are like children. Now, what we need to understand is there is something called consolidation where for all these companies put together, we prepare financial statements. We learn that as a part of our Group 2 accounts. Okay, tomorrow in our Facebook, in our YouTube live at 6 o'clock, we are going to look at topics in advanced accounting, which will include consolidation. Okay, right. So, Sunny, tomorrow, same time at 6 o'clock evening, we will have advanced accounting related live. Okay, right. Concentrate carefully. Now, the point here is, say you are the auditor of this holding company. Means what? Consolidated financial statements preparation. You already learn in your Group 2 advanced accounting. If you have not learned it, please go and subscribe to that advanced accounting sessions and learn how consolidation should be done. I would say that we learned advanced accounting consolidation in a beautiful manner, which is very easy for anybody to learn consolidation in the quickest time, and you can almost be sure of a 16 marks question from consolidation. Bear that point in mind. Okay, right. Now, so you are the auditor of the holding company, which is preparing consolidated financial statements. Now, in consolidation, we already saw there will be financial statements of holding company, there will be financials of subsidiaries companies also. All put together, you will talk about what is the strength of holding plus subsidiary put together. Holding, subsidiary, in fact, even associates. There is something called associates where we invest into maybe only 20% or more, but not 50%. So we call them as associates. So all this you put together and try to prepare consolidated financial statements. Now listen, friends. When the auditor is auditing these consolidated financial statements, for the purpose of verification, auditor might want some information from the subsidiary company. Well, because the subsidiary information is also going into consolidated financial statements. The auditor can go and refer to the books of subsidiary company. Now listen, you are appointed as auditor of holding company. There is something called subsidiary company S1. You are the auditor of H, statutory auditor of H. But you have right, and you are doing the audit of consolidation as well. You have right to look at the financial information, books of account of the subsidiary company as well. Are you clear about that? Now, look at the amendment. Not just subsidiary company, even the associate companies financial records, books of account you can look at. So you can examine and understand the financial statements of as an auditor of holding company. You can do this for subsidiary company and also for the associate companies. That is what we learn in this amendment. Okay, right. If this point is clear to everybody, I'm moving to the next aspect in the amendment. Okay, Asmita, CA final audit amendments lecture. So, Asmita, I plan to do this amendments for CA final auditing hopefully in the next week. Okay, so you will get, if you are already on the Facebook page or if you are already logged into one of your WhatsApp groups, you will get a message regarding that very soon. Okay, right. Now, let's go to another super interesting topic, penalties. We learn about, the sections 139 to 146 of Companies Act. Basically, don't forget about the section numbers, but all the provisions regarding company audit. Okay, all the provisions regarding company audit. We learn them, right? We spoke about what all auditors should do in those cases. So responsibilities of auditors, duties of auditors, what auditors should do, what auditors should not do, all this we spoke of. Now, the important thing here is if the auditor unintentionally, understand carefully, I am dividing the discussion into two things now. Auditor unintentionally makes a mistake. Unintentionally means auditor did not wantedly do it. It just happened. Mistake just happened. So maybe it was carelessness, or maybe it was some oversight, or auditor did his or her professional work, still it didn't come out, something like that. So unintentionally, there is a misstatement in the financial statements, and that misstatement in financial statements was not reported by the auditor. I'm repeating. There is a misstatement in the very, very important point I'm discussing. High probability of this kind of thing getting tested. There is a misstatement in the financial statements that was not reported by auditor in the audit report. See, if there is a problem in the financials, who else should tell? Auditor only should tell. Can members go into the company and look at it? No, only auditor can tell. Auditor's report is silent about it. Now, here we are dividing. Unintentionally, this happened. Intentionally, this happened. Understood? Two scenarios we are looking at. Unintentionally, if it happens, what to do? The fine for that could be between 25,000 to 5 lakhs. 25,000 to 5 lakhs, or 4 times of auditor's remuneration. This is the amendment. 25,000 to 5 lakhs of fine, or 4 times of auditor's amendment, whichever is lower. Whichever is lower. I am hoping you are making a note of these important points what we are discussing. Okay, it's really, really critical, because I am sure from these amendments what we discussed in the past half an hour, there is a good probability of maybe some 5 to 10 marks which you might get just from this half an hour of learning. Okay, right. So what did we understand? 25,000 to 5 lakhs of fine, or 4 times of auditor's remuneration, whichever is lower. Whichever is lower. All right. So these are the consequences if the thing has happened unintentionally. What if it is intentional? Auditor knew about it. Management, auditor colluded. Auditor finally did not talk about this in the audit report, but auditor was fully aware of what the problem was. Now, in such cases, the penalty or fine will be 50,000 to 25 lakhs. It can range from 50,000 to 25 lakhs, or 8 times of auditor's remuneration, whichever is less. 8 times of auditor's remuneration, whichever is less. So, friends, what is the let us summarize. So, there is a problem in the financials. Auditor's report is silent about it. Auditor did this unintentionally. Okay, Auditor did is intentionally. Unintentionally means 25,000 to 5 lakhs of fine. It could be anywhere between that, or 4 times of auditor's remuneration, whichever is lower. And if it is intentional, then what is the consequence? If it is intentional, then the consequence is the fine will be 50,000 to 25 lakhs, or the 8 times of auditor's remuneration, whichever is lower. Wonderful. Okay. Now, auditor. So we are moving on to the next point. Auditor is convicted means auditor has done something deliberately, willfully, wantedly. There is some problem. Auditor joined hands with management and deliberately did some problem. Then auditor has to refund the entire audit remuneration. Now, this refund of remuneration, is it linked to penalty? No. Penalty is separate. This is separate. Oh my God. What penalty we just discussed is separate. This is refund of remuneration. Okay. So entire remuneration what the auditor got should be refunded. Or if we already paid penalty, doesn't matter. You have to refund the entire remuneration. Okay. Now, in addition to the refund of remuneration, auditor has to pay damages. What do you mean by damages? There is somebody like members or creditors or statutory institutions, members, creditors, statutory bodies, okay, who believed the information what was audited and acted on such information and suffered loss. Why? The financial statements were fraudulent. Auditor's report did not talk about it deliberately. Then such people can claim something called as damages from the auditor. We suffered 25 crores of loss because of this fake audit report or bad audit report what you've given, or fraudulent audit report what you've given. Pay me 25 crores because I lost 25 crores. What? Can we really do that? Yes, that's the point what we're talking about. Okay. So who can claim for these damages? Statutory bodies, members, or creditors of the company. All right. Then let us move on to the next point in terms of amendments. There is a partner, or say, let us say there is a firm, A and B Associates. In A and B Associates, say A and B Associates is the auditor for a company called as Z Limited. Okay. A and B Associates are the auditors for Z Limited. Partner A, okay, let's talk about two partners. Partner A did the audit of Z Limited and colluded with the management of Z Limited, and this partner was a part of big fraud what Z Limited has done. Okay, right. In such a case, I'm just taking an example. I don't even know if a company called Z Limited exists. Okay, right. Now, so here, if this auditor does the audit in a bad manner and give a fraudulent report on that company, then this auditor will be liable for penalties, actions, etc. So there is no confusion about it. Just now we spoke about intentional collusion and all of that, what all auditors should do. Now, the point is, will firm also be liable? Firm will be liable for civil action, but remember, for any criminal action, which is taken against this particular auditor, means more serious action which will be taken against this auditor, you can't say the other partner also is liable unless that other partner B also knew it and they both have done it together. So there is some criminal action. Maybe this person will be jailed now. I'm just saying. So in such a case, criminal action can't be taken against the other person who is not aware of it. If the other partner B is also aware of it and is a part of the entire fraud which was done, naturally that B, he or she also will be dragged along. But if that person is completely unaware of it, that person cannot be held responsible for any criminal action. So unless that party was a part of this collusion means it is coming together for a bad reason to do a fraud. That is what you mean by collusion. So unless that other partner also colluded, you can't hold that other partner responsible. Okay, right. Now, friends, talking about the next point, earlier, for term for appointment of auditor, we always spoke about auditor is appointed in one AGM and the term will be for 5 AGMs. And in every AGM, auditor's appointment will be ratified. This is what we used to say. The amendment in 2017 is, there is something called 2017 amendment. In that, we have clarity that such ratification related points are removed. So we don't have ratification anymore. Are you clear about it? So that annual ratification of auditor, some of you would have probably read that. Okay, so annual ratification of auditor's appointment is removed. You don't have annual ratification of auditor anymore. Are you clear about this, friends? Right. Okay. So, Asmita, what I want you to do is see, in Amendment 2017 itself, that point came up. So, I know that sometimes in institute study materials or practice, even today in study material, you still have those old points only. I know that. And sometimes when questions like this come, particularly for those who are writing exam in November, I want you to write this very clearly and be very mindful of this. You clearly state in your answer paper if there is a question regarding the ratification, etc. Write very clearly that this, the auditor need not be auditor once appointed has term of office for 5 years or till the completion of your next fifth AGM, and you explain all the point, and then you write clearly as per 2017 amendment this point is removed. Okay, so if you write clearly like that, nobody will take offense, and examiners are also knowledgeable people. That is what is the assumption with which we should live, and that is the best assumption we should take for us to have peace of mind in life. So you write clearly like this because that is the best what we can do. And don't worry, sometimes even if, so in suggested answers, what if they still talk about ratification, sometimes this kind of errors may creep in. Don't worry about it. If you clearly write that this ratification is there, but there is ratification is there, but now there is an amendment which removed that ratification, was there and now it is removed, that will be perfectly acceptable. All right, so now let me start looking at the questions which many of our friends have been pouring in. So can you please tell us about what the assertions are? Rajat, assertions are basically, just imagine if I say, just for discussion's sake, I am a knowledgeable person. If I make a statement like this, I'm a knowledgeable person. I am a person is fine. I am a knowledgeable person when I say I am making an assertion or an affirmation. Okay, right. Similarly, management, when they give the financial statements, management make some assertions. Assertions regarding different account balances. What are the assertions? So just imagine you have balance sheet and P&L in front of you. You know what management is saying? Just imagine, think about it. You have, say, this is balance sheet and this is P&L. These are in front of you. Management says, hey, whatever you see as assets, they really exist. Existence assertion. Whatever you see as liabilities on the balance sheet, they really exist. Existence assertion. Okay? Then, whatever has occurred means in P&L and changes to balance sheet. P&L and changes to balance sheet. All those transactions which we are claiming have occurred, really occurred. Really they occurred. This is an affirmation. Okay? Then, all the transactions are accurately recorded. All the balances are accurately calculated. Then, that is accuracy assertion. Then, in the financial statements, everything, there is completeness. We did not miss out on any point. There is completeness. Okay? Then, whatever values you see for the balance sheet, all those values are as per applicable accounting standards and generally accepted accounting principles. So what are we saying? These values are fine. That's what we are claiming. Who is saying all this? Management. Rights and obligations. Whatever you see as assets, they are the rights of the entity. Whatever you see as incomes, they were also the rights of the entity. Whatever you see as liabilities and expenses, they are the obligations of entity. That is why we wrote. And they are the obligations of this entity only. Someone else's rights and obligations we did not bring into our financial statements. Understood? Then cutoff. Cutoff assertion talks about in this period from final balance sheet asset or P&L account for the year ended. In this period, the transactions occurred. Or as at this date, this is the financial position. So what exactly are you doing here? You are trying to talk about specifically the adjectives or some spicing up of those assertions, so that you're saying, hey, this is what the financial statements are. Presentation and disclosure is as per applicable financial reporting framework, accounting standards, schedule 3, all of that. Now, who is making all these statements? Management is making these statements. What should we do as auditor? In vouching and verification chapter, we learn. In vouching and verification chapter, simply, if you know the assertions, a vouching and verification chapter is super easy. You should know 3 things. You should know how a ledger account looks like. Everybody knows how a ledger account looks like, right? Then it will have opening balance. It may have closing. It may have opening balance and closing balance. If it is only P&L item, it will not have opening balance. That we are aware of. So let me just say, in a ledger account, maybe there is opening balance. There might be closing balance. There will be debits and credits, means transactions which occurred in the ledger account. Okay, that is the ledger account. Then you have audit comfort bucket. In the audit comfort bucket, see, we have our modules on vouching and verification. I find a lot of students saying that there is a difficulty what they are noticing in vouching and verification. Just look at our framework, what we discuss in our sessions. I can tell you, you will get full marks in vouching verification because it is a very simple topic. It is like one framework. Fixed assets, same framework. Any liabilities, same framework. Inventories, same framework. Incomes, expenses, everything will go through the same framework. So those of you who are finding it difficult, you can just look at our modules on vouching and verification. Okay, right. Then looking at the next aspect. So the next aspect here is basically the financial statements. Audit of financial statements is the point. Okay, is the chapter. Now look at this. So we have ledger account. Then we have audit comfort bucket. So what should you do? You should check for every account balance. The audit comfort bucket you are aware of. So I do the audit comfort bucket as a part of our classes. So in our essay 200 itself, I discuss a lot of points there. So test of compliance with laws and regulations. Then test of controls. Then substantive analytical procedures and test of details. Right? All these 4 you should check for the points in the vouching and verification. The moment you come to test of details, straight go to assertions. Just now I discussed with you all the assertions. Just check all the assertions and see whether those assertions are met or not. Something like existence. How will you check existence? Physical verification is the auditor's procedure. Then you want to know existence for maybe inventory. Auditor may carry out or may observe counting of inventory with management to understand that. The occurrence. We want to know whether sales have occurred. So auditor will verify the sales invoices and other sales documents to know whether the transaction has really occurred. Then accuracy, what should you verify? So if it is a balance confirmation what you obtained, you are verifying the existence, balance and accuracy and other points from the balance confirmation. So like this, friends, what you will do is you will have all these assertions and you will check what is the evidence I should get to say management is claiming all these things. But what management is claiming, is that real? Is that reasonable? Can we say that makes sense? Whatever exists, whatever is there in the balance sheet, does it really exist? Do we know that? Do we have evidence for that? That is our audit, that's all, nothing else. So what I just discussed with you, a ledger account, audit comfort bucket and assertions. In auditing, there is nothing other than these principles, what you should do for every account balance. Okay. So if those of you are, again, I'm repeating, those of you who are struggling and finding difficulty in vouching and verification, just go to our modules. You will find it beautifully easy. Okay. Right. Then let me go through the other questions. Need or accounting standards quick revision. So Mahesh, let me see. We'll just consider that and we will let you know if we schedule that. We already did one session on that actually. But November examination ratification we discussed. So auditor will continue for 5 years. Yeah. So Hari Krishna, the term of office is for 5 years. If auditor is appointed in the first AGM, then the auditor's term is till the conclusion of 6th AGM, unless auditor resigns or auditor is removed. I'm repeating, unless auditor resigns or auditor is removed, this holds good. Okay, right. Then next one, subscribed. How far weightage is covered? Who is this? Prudvi. Hi sir, I subscribed for essays with you. How far weightage is covered? Yeah, of course. So Prudvi, okay. Let me clarify this for everybody. Our auditing sessions which already went live, like our auditing standards, then company audit, audit of financial statements, banking. These topics, sure shot, will give you 70 marks plus. Okay, and it should probably give even more, but I'm saying sure shot 70 marks plus. And you know what? With high level of certainty, just go and refer to the sessions. You will have answers to all these. And we need to write answers same as study material. Ashwin, no. I mean, you need to communicate the essence or the summary what you have in the study material, but it is humanly impossible for us to by heart whatever is there in the study material. I don't think any faculty in the world will be able to by heart our institute study material and reproduce what is there. And don't worry about it. Okay, right. Then what else? Vouching verification. Fatima, I answered point on vouching verification for you and many others. Then can you tell what I should concentrate apart from your essay classes? Prithvi, I already told just at the start of this, in the very first 2 minutes or 3 minutes, Prithvi, I told something. Auditing standards plus company audit modules, what we launched, financial audit of financial statements, and banking, what we already launched. These, so basically I will put all that together along with accounting standards. Eyes shut should get you at least 70 plus. I'm saying that. Okay, so it should give you at least 70 marks. That is my best guess, or based on my close to 10 years of experience of teaching auditing. I can say this confidently that you will be good for 70 marks when you are super thorough with these topics. Okay, they are all live and you can refer to those. Okay, then can you explain thread? Okay, so we are going into another topic. So Sunny, I'll just take that up so you can reach out separately and we will talk about that. ITSM, IT, how should be the answer? Same as study material. Ashwin, I didn't understand the second question. Okay, please explain that to me. I'll answer that. Prithvi, whatever session we are doing, it is recorded and it will be live, or it will be available on our IndigoLearn page and you can refer to that. So audit of special entities, how can we answer those questions? Kanan, very soon we are making this also go live, audit of special entities, where I have a very simple framework. Okay, the videos are going to go live very soon, but I have a very simple framework to think about it for everybody. Listen, friends. Let it be audit of hospital, audit of school, audit of club, audit of cinema theater, whatever it be. Okay, whatever it be. We have a simple framework. How should we think through? Because if you understand the way to think about it, that is when you can answer any topic. Okay, right. The way I said in voucher verification, when you look at our modules, you'll see there is just one framework. Into that framework, all the topics will flow in that way. Now let us look at special audit. What is the way in which you have to approach special audit questions? First thing you should ask, what is the type of entity? Now, if it is a school, you may say it could be a trust. So kind of entity. Then if it is a hospital, it could be a trust or it could be a company, whatever. Then if it is a if it is an NGO, then you would say it has to be a trust or a society or a Section 8 company because it's an NGO. So first, what are you talking about? First, you're talking about I'm talking about special audit. A lot of people are asking no questions on special audit. I'm giving a simple framework. Please make a note of this framework. We have videos also on this which are coming up very soon. So hopefully just in a week or so, you'll have all of them. So the first one is the type of entity. You have to write in your answer the type of entity. So you will write about this organization could be based on the type of entity. It could be like trust or society or company, or it could be a Section 8 company or whatever. Right. After that, based on that, you will talk about okay, just hold on. Let me just clarify this and then please ask other questions. Based on this, you will talk about what is the kind of act which will be applicable. If it is a trust, you have Indian Trust Act. If it is a society, you will have Societies Act. If it is a company, you have Companies Act. So basically, what is the kind of regulation which is applicable, right? Then, depending on the type of organization or depending on the type of legal structure, you will have something called as governing board. If it is a company, you will have board of directors. If it is a trust, you will have board of trustees. If it is a society, you will have managing committee. Okay, so you will talk about verifying the minutes of governing body, because a lot of important points get discussed in the governing body. So first you're talking about legal, a kind of legal entity it is, then you're talking about the act which is governing it, and then you're talking about what is the governing body, and verifying the minutes of meetings of such governing body. All this will be the first part of your answer in special audit or audit of different businesses. Okay, right. Now come to the second one. After doing that, think about how does this business or how does this entity get money in inflow. Now listen carefully to how you should approach it. You will just give 3 examples of inflows which are unique to that business. Okay, so if I talk about audit of school, I will talk about I'll talk about admission fees or tuition fees or maybe bus fees, something like that. So 2-3 things which will be super unique only to that business. If I'm talking about audit of hospital, inpatient fees, then outpatient fees, diagnostic center, etc. Okay, just give 3 examples. Just give 3 examples and say etc. Now those 3 examples, don't give examples like parking lot, canteen, things like that, which will be there in every business. Okay, so don't give those generic examples. Give examples which will be unique to that specific business. Okay, does it make sense? Just give 3 examples. After giving 3 examples, there are some important points regarding inflows what you should write. Now, when I say there are some inflows, is it a risky area? The school is getting fees. From school's point of view, do you think there is a risk of mismanagement here? Yes. From hospital's point of view, when hospital is collecting fees from patients, is there a risk of mismanagement here? Yes. So, because there will be risk of mismanagement, what we should do is check whether the entity has adequate internal controls for collection of, you will write, fees or subscription, whatever that inflow is. Sometimes it might be donation, sometimes it might be grant, sometimes it might be fees. Whatever is the kind of inflow for that business, you will write, check whether the organization has adequate internal controls regarding collection of that inflow. Whatever that name is, you will fill that up. Okay, are you clear about this point? Right. Now, so we spoke about the internal controls regarding that. Then check whether there are receipts given for the inflows, for the amounts which are collected. Whether those receipts are pre-numbered, serially numbered. So you know what? You should have some criminal brain to understand why all these are required. I give a receipt book to a cashier and I said, go and collect school fees. Now, cashier collected school fees. After collecting, cashier kept in pocket. How will I know? Think about it. How will I know? So, compulsorily receipt should be given. And when receipt is given, how will I know that somebody paid fees and receipt was given to that person? There should be counterfoil of that, means there should be carbon copy of that receipt. What we should have? Yes, we should have a carbon copy of that. What if that person tears off this receipt along with carbon copy? I don't see receipt, I don't see carbon copy. Then what? That receipt should have a pre-number. Something like, if this receipt is 19, after that there should be 20. Now, later management will check all the receipts. Alright, how did suddenly from 18, how did you jump to 20? Like that they will identify. So that is why receipt books should be bound, pre-numbered, pre-printed. Numbering, they should not write manually. If they write manually, then they will, the page that they tore off, if they wrote 19, on the next page also they will write 19. So they should be pre-numbered and they should be serially numbered. See why all these small points are important. If they are not serially numbered, what is the problem? If it is not serially numbered, after 1 you have 7, after that 25. I don't know even if a receipt is missing, right? So they should be pre-printed, serially numbered. They should be bound book, pre-printed, serially numbered, and it should have carbon copy. Now, if you have all these things, then you collected fees. That amount, whether you are a school or a hospital or a trust or a club or a non-profit or whatever you are, you should go and deposit that in bank at regular intervals, because you should not just sit with cash forever. So check the deposit with bank. So if any amount is given, if there is anything like a grant letter, verify such grant letter. See how simple, how logical. So this is all about inflows. Now we will talk about outflows. Achha, one more point before about inflows. We spoke a lot about internal controls. Now, in audit comfort bucket, we have internal controls. But also, do you know that we have test of compliance with laws and regulations? Yes. Check. See how generic the answer is, but it is super relevant. Check whether applicable laws and regulations regarding collections or regarding inflows have been followed. That's all. So I don't even know whether any laws and regulations are applicable as a student, but I will simply write check whether applicable laws and regulations have been followed. That will give you a mark. Okay, right. So check whether applicable laws and regulations are followed. Internal controls we just now spoke about. Verify whether any substantive analytics can be done. Kind of substantive analytics we learn as a part of our auditing standards. That's one of the most beautiful things. I'm sure you would have already fallen in love with substantive analytics. So logical, so conceptual, right? So if anybody has not listened to those sessions, please go and listen. You are really missing something. So substantive analytics, you have to carry out. So how many students, what is the fees per student, how many patients, what is the fees per patient, like that kind of calculation you should do and say, oh, 1,000 students and 500 rupees is the fees per student. So what is the actual amount in the book records? So like that, there should be some kind of cross-checking which should be done, right? So that is about substantive analytics. And then test of details. What do you mean by test of details? Verifying the grant letter, then verifying the receipts, then verifying the bank statement to confirm that amounts are actually deposited in the bank. All that is a part of test of details. Okay, that's a very detailed checking what you're doing. Wonderful. Then similarly, you should go to all the outflows. Just give 3 examples. What kind of outflows can a business have? School. Now, talk about the most relevant ones. Maybe teacher fees. That might be one important thing. Then school maintenance, right? So like this, just give 2 to 3 very important examples. Similarly, if you're talking about hospital, there might be doctor's fees. Then there might be hospital maintenance. So just give 2 3 examples. You know what will happen when you just give these 2 3 examples? Your answer will not look like, "Arey yaar, ye template likh diya." No, this person customized the template for that particular business. You understand that, right? So that customization feeling you should give to examiner. How do you give the customization feeling? Frankly, you are not doing too much of customization. You have a framework in mind. As per that framework only you are applying. But when you do this little customization, that examiner will feel, "Arey, wonderful. This person is exactly writing for our business only. It's not a general framework." So that kind of personalized feeling examiner will get. And it's like on a mug you give to your friend with photo of friend. Now, most of the mug is already made for everybody. But photo of friend, you just print on it. It just looks so personal, right? So it's not that the entire cup is made only for your friend. Only the photo was stuck for your friend. So that printing of photo will give a lot of feeling and a lot of happiness for your friend, right? You understand what I mean? So that kind of customization, we should do minor customization to give that feel to the examiner. Right, now moving on. So regarding outflows, so we discussed about inflows. Regarding outflows, check whether after giving examples, check whether there are internal controls, whether the internal controls regarding the expenses which the organization is incurring, and whether a designated person is appointed to approve and make payments for those expenses. See, collections, payments, both are critical, both are risky areas, right? So that is why check whether there are proper controls on those. Then verify invoices to confirm that expenses are actually incurred, or bills to confirm that expenses are incurred for the purpose of organization. That is also important. Imagine a school is incurring expenditure. School is incurring an expenditure for some random thing. For building a cinema theater. Why will school build a cinema theater? Why will that expenditure come into school's books of accounts? Right? So that is ridiculous. So check whether expenditure incurred is relevant for the purpose of the organization. Right. Then, so we spoke about outflows also. Now talk about assets. It's very simple. Just give examples of 2 fixed assets which will be relevant for the business. School, you can talk about school classroom furniture. Now, I don't want classroom, table, desk, chair, chalk piece. Don't keep writing all of that. That is not what really examiner wants. Just talk about classroom furniture. Then school premises, computer lab. So just 2 3 examples. Just give those 2 3 examples, and then etc. That beautiful word what we have in English, etc. Right? So just give 2-3 examples and write etc. And then what you will write is, for all the assets, observe physical verification that management does. Check whether they are depreciated as per applicable accounting standards, whether they're depreciated as per applicable accounting standards and accounting policy of the organization, and whether the value at which those assets are carried in the books are appropriate. Enough. Okay. So these are the points what you need to talk about regarding fixed assets. Now, sometimes in some businesses, your current assets also might be important. Something like in a hotel business, if you're doing or if you're talking about audit of hotel, you might have current assets which might be very important. So a lot of food stock might be there. So in such cases, what you will talk about is current assets. Again, you'll talk about current assets. What should you check? Existence and valuation. These are the two assertions which compulsorily you have to talk about. Existence and valuation. Observing the physical verification that management carries out, and verifying whether the value at which current assets are presented in the financial statements is as per applicable accounting standards and the accounting policy of the organization. Now, remember, for trusts, one of the important current assets what they have is fixed deposits. Okay, huge fixed deposits a lot of these trusts have. So check whether the fixed deposit receipts, or check the originals of fixed deposit receipts to confirm their existence. So again, here I'm not changing anything. Existence only I'm verifying. But how? By checking the originals of those fixed deposit receipts. Done. We are done with assets. This much you write. No, don't keep on elaborating too much. Then go to liabilities. Regarding liabilities, check the liabilities of the organization. Just give 2-3 examples like bank loan or something like that. Okay. Obtain the balance confirmation from banker in case the organization has a bank loan. Okay, so you can just talk about that. Fine. Then move on. Now, corpus, capital. So I'll talk about share capital, corpus, all this under one category. There might be share capital, corpus, this kind of thing. What you should do is you will check whether the amount credited to corpus or capital is as per the letter received from the donor or from the person who gave that capital. So if there is a donor who, we are a trust or we are a non-profit organization, we received a letter from donor that it is for corpus. So the some 10 crores we got, which is for corpus. You know what we should do? We should credit that to our corpus account, something like capital, and correspondingly that amount should be made as an investment. So the interest what you earn on that, only that should be used for the purpose of business. You should not use up the corpus. Did you understand the logic of corpus? So check whether the amounts credited to corpus, whether the amounts which came into the organization, particularly non-profit organizations, with specific mention that they are for corpus, whether they have been credited to corpus account, and correspondingly whether investments have been made from the corpus. That's all. Okay, right. Now that's all. So share capital, there is nothing we'll elaborate on. Then move on. Internal controls. We will write a very generic point. Check whether the organization has adequate internal controls for different critical risk areas. Over such a generic point, you will write, check whether school has internal controls for different critical risk areas. Check whether hospital has all this. Check whether trust has all this. Club has all this. You'll just write that word. That beautiful customization, what you do is the magic what you're creating. Okay? Right. Then talk about the next aspect. Check whether the organization has complied with applicable laws and regulation, including taxation. That's it. Okay? If you know that there is a special law applicable only to that business, mention it. Something like it is an audit of cinema theater. There will be something called entertainment tax. Okay. So in that case, just mention that. Check whether requirements of entertainment tax have been met. So like that, if you have anything specific, right? Otherwise, what is a simple generic thing? Check whether applicable laws and regulations, including taxation for the organization, have been met. Okay. Then verify whether the organization has proper accounting systems. Whether the organization has proper accounting systems, right? And finally, you will write obtain management representation obtain management representation or written representation as per SA 580. Now, friends, this is the general framework, and I told you how to customize it. I hope those of our friends who asked for some more detailed drill down on special audit, I hope you got enough clarity on how to approach those points. Okay. Okay, let me just look at other questions. Thank you for all the videos on YouTube, especially accounting standards. Srinivasan, so there is much more in the detailed modules what we have on our website, which I believe that every student has to learn accounting standards, not just to by heart something and throw in the examinations, but accounting standards, auditing standards, all these topics, they are hard. They are heart of our entire CA profession. So you need to really internalize those points perfectly. Okay. So for that purpose. So I really encourage you to subscribe to those detailed modules and learn them in detail. Right. Then let's look at the other one. Special audit is over, sir. Whether amendments in ratification, 5 years, there is no requirement ratification. Okay, I think I already discussed that point in detail. Company audit lectures, are they available in free course or do we need to subscribe? So Prithvi, you need to subscribe for the company audit lectures. So I think some pieces are available in free resources, but I think most of it is available when you subscribe for it. Right. Then whether amendments, I think we already spoke about that. Can we have quick revision for advanced accounts? Rishivardhan Prakash, sir. कल शाम 6 बजे को यही करने वाले अपन. Okay, so 6 o'clock tomorrow we are going to have a session on advanced accounts. There is going to be a quick revision. I will talk about different important aspects on it. Then where to study essays. Shrikant, all the essays in our IndigoLearn module you will learn within 18 to 20 hours of time. 18 to 20 hours, that's all. In that time, so what is 18 to 20 hours? Literally one day, right? So in that time, all the essays are covered. So if you really want, if you are not comfortable or thorough enough, just subscribe to those. In 18 to 20 hours of time, you will finish all the standards on auditing. Right. In case of special audit, question is asked for 6 marks, whether we have to write 6 to 8 points or the entire points in practice manual. So Ajay Vignesh, so I explained to you what all points need to be written, and these points, I'm sure you can write. Just bear in mind the important principle. If it is a 6 marks question, in about 9 to 10 minutes you have to finish your answer. So in about 9 to 10 minutes means maybe you can just write one side or 1.5 sides of your answer paper. So just ensure that these many points what we discussed you write, and I'm confident you will get all the marks what you deserve. And RS, I have subscribed, and they are amazing. Thank you, RS. And a lot of these testimonials and good feedback from all the students will keep us going. We are extremely humbled, I would say. I don't want to use the word proud. We are really humbled that we are able to serve students across India, and not just India, almost about some 10 other countries who are subscribing to our sessions and who are enjoying how accounting, auditing, GST. Now we also have sessions on financial management, economics, and soon you're going to have sessions on SMIT also. So all these things, we put in our heart and soul into it. We do it because we just love the process of making you learn and fall in love with learning. So that is our objective. So for that purpose, we are putting our best effort. We welcome feedback on how we are doing it. We are really open for feedback on that, because we know that nobody can give feedback to us than students like you who listen to these sessions, who listen to our, who subscribe to our module. So all these things. So considering that, please write to us and share your feedback. It could be on a WhatsApp group, it could be on our Facebook page, it could be personal feedback to us, because you are the one for whom IndigoLearn is being built, and it is your responsibility to ensure that we do a better job, and we serve many more thousands of students like you in the best possible manner with best possible learning. Right. So are you going to take FR? Oh, certainly. It's going to be mostly, it will be available for, or quite certainly it will be available for May 2019 examination RS. So FR will be available. And friends, so that's it. I think now I would sign off, and thank you so much. So I really encourage you to share with your other friends that tomorrow we are doing advanced accounting. And the more people that they come in, I think it's better for the accounting and our CA community or student community, that we can do much better in our exams and also in our professional life. So just spread the word. That's all I would say. So tomorrow at 6 o'clock, see you all. Thank you very much. Have a nice Saturday.